For the last 2 years, the growth of the tech sector relied on a single assumption: that Nvidia was the only company capable of powering the AI revolution. By early 2025, they were the world's most valuable company, serving as the hardware engine for every major player in the field. That status changed on Monday morning, January 27th. As the opening bell rang on the New York Stock Exchange, Nvidia's share price immediately began to slide. Within minutes, the sell-off became a rout as trading volumes spiked to record levels. This chart tracks the destruction in real time. By the closing bell, 17% of the company's market cap had vanished. In 8 hours of trading, $589 billion in value was wiped out. Normally, a loss of this scale follows a massive earnings miss, a legal catastrophe, or a product recall. But Nvidia's quarterly reports were clean, and there were no lawsuits pending. The company hadn't changed. The market's outlook on the entire AI industry had. The volatility began as investors parsed the implications of a file uploaded to the internet the previous week. It was a piece of open-source software that performed at a world-class level, despite being built without the massive hardware infrastructure the market had priced into Nvidia's valuation. This software didn't come from a major American lab. It was developed by a team in Hangzhou, China, a group of researchers operating outside the traditional power centers of Silicon Valley. The shock to the tech sector resulted from a technical breakthrough that rendered existing financial models for AI infrastructure obsolete in a single afternoon. The file, named DeepSeek R1, appeared online on January 20th with almost no fanfare. There were no stage presentations or coordinated marketing campaigns. The team simply dropped the code and the technical report onto the web for anyone to use. Over the following weekend, researchers began benchmarking the model. They found that this free software was matching the performance of the most advanced systems from OpenAI. On several key reasoning tests, the Chinese model actually took the lead. This discovery violated the established logic of AI development. The industry operated on the belief that creating a top-tier model required billions of dollars and access to the largest server farms on the planet. Meta, Microsoft, and OpenAI committed over $300 billion for massive data centers. DeepSeek ignored that path. This tiny block represents their training cost, $5.6 million. They achieved the same results while spending less than 1% of the budget. The team didn't just save money, they saved time. They reached the industry's frontier in 55 days, proving that the established link between massive spending and AI performance was a myth. DeepSeek's technical path was dictated by international trade policy. Strict U.S. export restrictions were designed to block China from purchasing the high-end chips required for brute force AI training. Because the team was denied access to the best hardware, they were forced to abandon the more is better approach used in San Francisco. They couldn't afford to be inefficient with their compute power. They used older, less powerful chips, but optimized their software to a degree the industry hadn't seen before. By writing smarter algorithms, they extracted more performance from restricted hardware than their competitors were getting from the best chips on the market. The trade embargo intended to slow down Chinese AI progress inadvertently incentivized a more efficient methodology. DeepSeek became a leaner, more effective competitor because they had no other choice. As the data from DeepSeek spread, global investors reached a new conclusion. The idea that more compute equals better AI was no longer a safe bet. The hardware-heavy strategy that had fueled the market for years had been proven inefficient. This creates an existential problem for the largest tech firms. If a small team can match their performance for $5 million, the hundreds of billions they've spent on data centers may never see a significant return on investment. For years, the high cost of entry acted as a financial moat, protecting the incumbents from new competition. That moat has been breached. The ability to spend billions is no longer a guarantee of market dominance. The industry is shifting away from hardware-driven growth and toward algorithmic innovation. The competitive advantage now belongs to the teams that can do more with less, rather than those with the largest budgets. State-of-the-art AI development is no longer locked behind a multi-billion-dollar entry fee. A small, disciplined team now has a clear path to matching the output of the industry's largest players. DeepSeek didn't just cause a market crash. They revealed that in the next era of technology, the most valuable asset isn't a massive server farm, it's the ingenuity required to work within constraints.